Hi, my name is Adam Bergman, and I'm a partner with the IRA Financial Group, president of the IRA Financial Trust Company. Today I want to discuss the IRS prohibited transaction rules. These are probably the most important rules that you need to have a solid understanding if you want to use your retirement money, IRA or 401k, to do alternative assets like real estate. This is paramount. This is why you need to work with professionals. It's why you want to work with trained attorneys from the IRA Financial Group, CPAs. We have them on site for a reason, because it is vital that you do not trip on these rules. These rules, if you do violate them in your IRA, you will blow your IRA. Tax penalties can go up to 100%. It's a disaster. You do not want to be there. So these rules are not very complex, but based off each specific fact, circumstance for each client, you may want some advice as to how you navigate these prohibited transactions. So let's just start with Section 408, Internal Revenue Code Section 408, because it talks about basically two things you can't do with your IRA: life insurance and collectibles. Collectibles, artwork, baseball cards, stamps. There's a special carve out for precious metals, coins. You could buy bullion, 99.99 grade, gold, silver, palladium. Coins are allowed too. American Eagle, state minted, or bullion quality. That's okay. That is not prohibited. With a 401k, you actually could buy life insurance. So that's one distinction in these prohibited transaction rules between IRAs and 401ks. With IRAs, you can't buy life insurance. 401ks, you can. Now let's go to 4975, which is the meat of the prohibited transaction rules. It's the heart of it. These are the rules that come into play anytime your IRA is involved in an investment and there's a potential disqualified person somewhere hanging around. And a disqualified person is defined under 4975E2, essentially, to summarize, you as the IRA owner and your lineal descendants, your parents, your children, your spouse, daughter-in-law, son-in-law, any entities associated with such persons. So it's quite clear. You can't buy a house and live in it. You can't buy a house and rent it to your kids, your parents. It's a no-no. Don't do it. You're going to trigger the prohibitive transaction rules. You get caught, you're going to blow up your IRA. Penalty can go up to 100% on the disqualified person stuff. It is bad stuff. So this is the kind of stuff that we have to navigate and talk to our clients about. The easy stuff is cut and dry. Obviously, you can't rent the house to your parents. You can't build the house yourself because you can't provide services. You can't personally guarantee an obligation of your IRA. And you can't benefit anyway from your IRA personally. So there's a whole slew of categories of prohibited transactions, all types of fact patterns on our website. I can talk about this stuff for hours and hours, but essentially you have to remember that if you do an IRA or 401k investment, you cannot personally benefit in any way. And again, you got to look at the facts and circumstances. So clearly if you buy a house and you're living in it, you're personally benefiting. If you buy a house and rent it to your friend, there's no personal benefit because all that rent money is going to your IRA, not you. A lot of people get tricked up and say, well, if I buy Apple stock with my IRA, I'm personally benefiting. So that should be a prohibited transaction. No, you're not personally benefiting directly. Your IRA is benefiting. If you want to take the money from your Apple investment and use it to go shopping or to pay down debt, you got to take a distribution from your IRA, either pay tax or not, whether it's a Roth, but it's not your money yet. It's still in the IRA. That is the distinction you got to remember. You got to make sure that none of these IRA investments personally benefit you. So if your boss comes to you and says, hey, you want to keep your job, you got to invest 50 grand in this business, and you do it with your IRA, even if you don't own any of that business, the fact that you're doing it to personally enhance you, to keep your job personally, is probably a prohibited transaction. So there's this whole slew of different scenarios that you can go into, which you may on its surface not appear to be prohibited, but when you dive into and look at the rules, could trigger a prohibited transaction. But these rules are vital. They're found under 4975C. 4975D, as in David, has some exemptions. Most of them are not going to be available to 99.9% of Americans. The one that a lot of people use is the solo 401k loan, which I will talk and speak about in another video, and also the Rob's exemption, using a 401k to buy corporate stock, which again will be subject of another video. But for most Americans, don't do anything that personally benefits you or a lineal descendant. You shouldn't be anywhere near it. And if there's a question, don't do it, because the IRS get serious about this stuff. I've seen them in an audit trigger a prohibited transaction on someone who inadvertently sent $500 of their $500,000 IRA to themselves to pay an expense when it should have gone to a third party. They just got the checks, the LLC names mixed up, and the IRS blew their whole IRA for $500. This is serious stuff. Everyone, I'm assuming, worked really hard for their money. You want to protect it. You got to work with professionals, and I think that's the value IRA Financial Group has. We've trained attorneys. I'm a tax attorney. I have a master's in tax law. Written 6 books on the subject of self-directed retirement plans. It's vital you work with professionals, whether it's IRA Financial or someone else. Make sure you're getting expert advice. Trained tax attorneys, not they're an attorney. I have plenty of friends that are attorneys but know nothing about tax law. Work with people that understand the tax law and can navigate the tax code. It's very different than litigation or real estate law or constitutional law. It is very specific. I did a whole extra year in a master's in taxation to get a better foundation on tax law. It's an animal in itself, and it's important to work with professionals. That's the most important thing I could say to anyone doing a self-directed IRA or solo 401k investment is understand the prohibited transaction rules. It is vital. Anna Bergman, IRA Financial, thanks for watching. 800-472-0646 if you want to talk about prohibited transactions. Love to hear some of your fact patterns, kind of help you navigate these rules. You can email me, of course, anytime. Adam B, A-D-A-M, B as in Bergman, Adam B at irafinancialgroup.com. Thanks for watching.